table's gonna fall.
This thing's gonna fall. This thing's gonna fall for sure. Why do we always have these makeshift? Is it on an angle?
It is on an angle. Let me suck in my gut.
All right, let me hit record.
I thought you had the record
Oh,
going
it is
already.
recording. It is recording. All right. Dave, welcome to the forest,
It's good to be here.
the mythical forest.
Yeah, look at this wonderful view.
This is where the magic happens. In this forest right here.
Let me just grab this tree branch.
Look, this is what I want to do. I want to do a short little video.
Sure.
A lot of the conversations we have with our realtors, with our agents, with our industry peers, our brokers and mortgage specialists in the industry is that it's been a really tough year. You know, the market's down, real estate transactions are down. You know, there's all this doom and gloom, higher rates, and all this uncertainty. But we've been doing all right.
Yeah.
So I wanted to send a message out and see, well, tell people what we've been doing, and maybe share some positive insights and a little bit of nuggets that hopefully will help motivate people to, you know, go strong going into the new year.
We've been mobilizing the team, right? We've been basically telling them, don't always look at things on the negative, kind of look for the positive and the opportunity within everything that's going around us, right? So like affordability has improved immensely with all the home prices coming down, right? So a lot of people that were in that price range just over $1 million who maybe didn't have the 20%, or who now can buy just under $1 million and they can make that down payment with the 10%. So giving that type of advice, I think, is a great opportunity to reach out to your former buyers and your realtors and have that conversation.
People have been so focused on the rate because rates have gone from like under 2% to pretty much 6% right now. And all they think about is that rate, and they think, I no longer can afford the property that I want. And that might be the case if the property you wanted to was January prices. But now when you take 20-30% off of the top, you're qualifying at a much lower price point, and your monthly payment is consistent. So this is kind of the opportunity that I see as well.
Yeah, I think the average is pretty minimal, right? Like a couple of bucks more, but it's not like hundreds of dollars more. We're talking like
or $1,000,
$50 to $100 more here and there for to qualify. But here's the thing, though: your payment may be $100 more, and you get to the house that you want. And when the market comes back, those rates are going to start coming down sometime towards at the end of next year or the year following. And then home values will start rising again. So now you're going to be sitting real pretty, right? Because you're going to see your mortgage payments going down if you're on a variable, and you're see your home values go up and back to where they were before.
You're actually in the you're going through a little bit of pain with, you know, the interest rates today, but the rates are only going to come down in the next 12 plus months. So you'll see your payments come down, which will put you in a much healthier cash flow position. Values will go up. You'll have a lot more equity in the home, and you'll definitely be way better off than doing nothing, sitting on the sidelines, being scared and waiting 12 or more months to get back into the market when the government's announcing basically 500,000 immigrants coming into the country every single year. There's going to be a lot more demand for housing. And I think that long-term prospect will be really strong in Canada.
Yeah, and look, it's not demand is there because consumers are losing confidence with housing.
Yeah.
The minute the Bank of Canada announces they're not increasing rates, there's a whole bunch of buyers out there. They're going to feel like we hit the bottom of the market. They're going to jump back in the market.
Yeah.
And they'll probably be timing it quite well. And then there'll be a larger segment of people that will wait for a rate cut. But when that rate cut happens, it'll start fueling the market again, and it'll start becoming a seller's market again.
Yeah.
And this has been it's all this pent up demand that's just sitting there on the sidelines. It's going to come back, like you said, immigration and supply and demand is not in line, right? So there's always going to be a surplus of demand in the marketplace. So it's inevitable. So I think it's a great opportunity to win, man. If I was an investor today, I'd be like, hey, I'm going to be able to buy. Rents are skyrocketing. I'd be able to buy at a lower price point than I have in the last 2 years or so. And I'm gonna not, maybe if I don't cash flow now, but when my rates come down and my mortgage payment comes down, I'm gonna start cash flowing really nicely.
Yeah.
So as an investor, great opportunity to get to the marketplace. As a first-time buyer, it's an opportunity to buy in at a price point that you probably will not see again. This might be the bottom of the price points, because we're seeing prices stabilizing now too, right, in most of the country. And if you're looking to upgrade, it's also a good opportunity, because if you bought a home, if you bought a home 3 years ago, you still have a significant amount of equity in your home. Not only the equity that you put down your down payment, but you have equity from the appreciation. We only lost roughly 12 months worth of appreciation. You still have those 2 years of appreciation. You could be in that first time condo or that first time townhome that you bought that you would probably like to upgrade. You're not looking at the market because everyone's telling you doom and gloom, but the reality is you have a ton of equity. You can transfer that equity over to the new property, and that property that you want to upgrade to is just come down in price. Because here's the reality: if you're $1 million property and it went down 20%, and you want to upgrade to a property that's 1.5 million, well, then that property went down 20%.
That delta's greater.
You have $100,000 differential. You're up 100 grand effectively by upgrading.
That's a good comment, because I get a lot of clients that want to do just that, and they say, you know what, I'm concerned about selling my home because I'm going to sell it at a 10-20% loss compared to earlier this year. And I say, yeah, you're 100% right, but you're also upgrading and going from $1 million purchase to 1.5 million. That 1.5 used to be 1.8 or higher in January. So as long as you're upgrading, even if you're selling the home and potentially having a paper loss, you're upgrading to something that is also at a much lower price point. So you're actually way better off.
But you didn't lose anything because you bought the house 3 years ago or longer.
Yeah, there you go.
And you're selling it for more than what you bought. So you never lost
anything. Not really a lot. It's just a mental, so psychological number that you gave yourself.
And I think if people sit around and wait for that, guess what? In no time, that house is going to be 1.8 again. Yeah, and you can sell your home for that extra 20%, but you can't afford the upgrade. Yeah. So you're back out of the market. So this is a great opportunity, I think. It's a huge opportunity, and I think it's really important for people on our side, on the finance side, to be communicating this, not to just our customers, but our realtor community. Because a lot of realtors are going, shit, the market's kind of just lost its wheels, it's over, I got to ride this out now. But what they should be doing is mobilizing their clients. They should be educating their customers and put a mortgage broker in front of them and say, and let's talk about affordability, let's talk about the ability to upgrade and porting your mortgage and keeping that low interest rate and so forth. And they can probably mobilize some of their customers who would really benefit financially from making a move today rather than waiting.
I think the realtors and the brokers that are ahead of the curve are the ones who are using this opportunity to educate their clients and their partners and colleagues on what's going on in the environment, trying to give them solutions. And the clients that have been on the sidelines because they're concerned about the market, if they're well informed and working with the right team, they may be willing to go into the market, take advantage of it, and will be a lot happier that they did that now versus next year when we see the market start to grow again. So I think that's the value that we should be bringing to the table. And so what sort of message would we be telling anyone who's not a mortgage broker, who's working at a bank, a traditional mortgage specialist, because they're definitely feeling the pain, especially because they only got one option, first of all. And secondly, because a lot of their business could be reliant on purchases, which are obviously down almost 40%.
Well, look, as a mortgage specialist, I think you're kind of in a real difficult situation, right? You have a market that's contracting. Your primary core business is purchases. Obviously, the pie's shrunk a lot. So it's a little bit harder to advise customers. If you're, doing the right thing and you're putting your customer in a 1-year term so they can ride this out and benefit from the rate reductions in the next 12 or 14 months from now, there's a compensation impact on you as well, right?
Yeah.
And then when the time comes, you're not going to be able to help that customer and put them into the right product, like a variable mortgage at that time, because the bank says, no, you're not supposed to be touching this client because you don't have any clients as a mortgage specialist. You're basically just a conduit that basically refers business and anchors it with the bank. The bank has the client. As a mortgage broker, you have clients. So we're able to talk to our clients, give them advice, put them into those 1-year terms. A couple of months ago, we're putting into 2-year terms and so forth, and get into hedge themselves and protect themselves against the inflationary increases on rates. And then when the rates come down, we'll be able to go back to the marketplace as they're coming up for renewal and negotiate the best terms for them.
Yeah.
Because the difference between a broker and a banker is a broker, you actually have clients. They're your customers.
You're also offering
specialist
advice.
As a broker,
that's the big difference. We can offer objective, real advice because I don't work for a bank, pink or red or whatever color the bank is. I can tell you I've got all these different options based on what your needs are today. Your priority, for example, is cash flow. You want to be liquid. You want to be able to have your payments as low as possible because you're worried about the environment that you're in right now. No problem. Here's the solution for that. 12 months from now, when the rates come down, maybe your priorities are different. I can move you somewhere else now and sort of navigate that world for you. Whereas one lender, it's got one set of options for you. So how are you legitimately getting the best advice in that world?
And in our world, like we're proactively calling our customers right now. When everyone else is saying, don't call your customers because rates are high and they're all upset. we're actually doing the opposite. We're actively engaging them, making sure that, like you said, are they okay? Are they comfortable with the current rate environment? Are they comfortable with rates going up any further? Can they manage those payments, or should we help them manage their cash flow? We've had a lot of customers who basically went from, lower interest rates, and they're saying, I need to redo my mortgage, re-amortize. I got to get my payment down because the cash flow is more important than the interest rate right now.
Yeah.
And we're resetting them because that's a priority. At the bank, as a mortgage specialist, you can't do any of that. They're not, customers are going to come back to you, or they might come back to you, but you're not going to be able to do anything for them because, that's not your role. Your role is net new business. It's not managing the existing.
Or they're not motivated to do anything for their clients because there's no financial benefit to them either.
Well, yeah, look, it's understandable though. I could totally appreciate why that would happen, right? But at the end of the day, it's the bank's created a model that is designed around them, taking over this customer relationship. It's not necessarily designed around advice. We're the broker channel. We have a fiduciary responsibility to our customers. And that makes it a huge advantage between us and I think in any banker. Not just today, but even when the market turns around, people need advice, they need some comfort. We should be calling them, we should be talking to them, not hiding under a rock and waiting for this to blow over.
Yeah, there's always opportunity, particularly when there's challenges. So right now, a lot of people are worried. I think we're trying to get ahead of it. We're trying to inform, keep everyone motivated and identify the opportunities and educating everyone. And I think that's the way to do it, because when the economic cycle starts to go back up again, whenever that is, sometime next year, very likely, we'll already be top of mind with our network and our clients and our COIs to make sure that we can get them the right solution. So,
and when we're saying when our mortgage brokers are talking to realtors and educating them, and those realtors are now referring their colleagues to receive the same opportunity to educate them and mobilize their customer base and educate their customers today. If you're not doing that, you may not have a realtor to refer you business when this is over. The ones who are actually doing this are not only going to be able to continue the relationships they have, they're going to build new market share with new relationships. And that is invaluable, because I can tell you right now, I've been doing this for almost 20 years, 19 years and change. And in this career, I've seen a couple of dips in the valley. And every single time I doubled down, I worked harder. I was more about business development because deals are not flowing in. And when the market straightened out again, and we're out of that, that dip, I ended up always capturing more market share. So I think this is a huge opportunity.
Because if I was a realtor and my business dropped off because there's less transactions happening, and you were actively engaging me, educating me, trying to work with my small pool of clients who were potentially trying to buy, and all of a sudden the market started to grow, you're the first person I'm going to call, because you engaged me the whole way.
I helped you navigate through this. I helped you create the communication for you and your customers, so you as a realtor stay relevant.
Yeah.
We helped that realtor possibly even transaction with a customer who was not going to transaction because they were not educated, because they're just reading all the news headlines.
They were concerned.
So guess who's the most important person and the most influential person in that center of that relationship? It's funny because the center of influence, sometimes I think people always like, oh, the center of influence is the person referring to me. Actually, the person who's educating is the person who becomes a center of influence. So we can become really, really valuable in that realtor relationship. And and like you said, that realtor is not going to go back to that banker or broker who didn't call them, who didn't educate them, and didn't help them navigate through this. They're going to call the one who educated them. So it's a win-win, man. And look, those realtors are going to be busy again. It's still going to be a seller's market. 2022, so look at 2024. 2024, I'll put it out there. I think it'll be a seller's market.
We're going to refer to this video afterwards.
Yeah.
But I'm going to sign off. This is what we say all the time. We're in the people business. We just happen to do mortgages. Focus on the people, focus on those relationships, and good things will come. So from the magical forest, thank you guys. Thank you, Dave.
Still can't get it.
We're going to try and figure out this this setup here, which is a little wonky. So thank you guys.
Later. You still can't do it.